Okay, Ken Kamen, where are you on this?
I think that if you look at the banking sector and believe that, the markets are very efficient mechanisms of discounting things, a year ago, when people didn't see everything coming with the banking sector, it became a real surprise and markets really reacted. Now everyone's talking about corporate loans and commercial loans going south. That's kind of baked into the cake. So to some extent, I think this is not necessarily just noise, because I do believe there might be some correction coming in the banking system, but it's certainly not unexpected, and the market is certainly in a position to anticipate that. And I think the individual investor has to be cautious that they're not scared out of the market because of what might happen over the short period.
Right. Harry Dent, well, what is with all the trading going on in AIG? That's just basically a roulette wheel, right? Because, well, who would buy AIG? That'd be crazy.
Exactly. This is the late stages. Yeah, they buy lower quality at the end of a bear market rally like this. What I want to say here is people don't understand that free market capitalism has a logic that is better, but it allows greater booms and leverage and innovation, like in bubble booms like this. But once you have those bubble booms and this much leverage and innovation, they do have to deleverage, and we get greater busts. That's the price you pay for greater gains and innovation over time. So this is free market capitalism working, but it's going to have to work on the downside for another 2 or 3 years.
Yeah, but Harry, don't you think that we're going to get with this type of yield curve that we see now? Don't you think that Bank of America and a Wells Fargo are going to have a license to print money for the next 12 to 24 months?
What about that, Harry?
Not that long, because consumers are not going to come back that far. They have been mortally wounded. Banks have been mortally wounded. Businesses, we are saturated with debt at much higher levels than even in the roaring 20s before the Great Depression. Again, people think, if you want to get rid of debt and you don't want to your kids inherit debt, let a good depression wash this out. It's just a big Chapter 11. It's
I'm not feeling mortally wounded.
Free market capitalism.
No, I think we in the industry tend to spend a lot of time trying to figure out, is this a V? Is this a W bottom? In reality, the individual investor is out there kind of saying, I know this is going to take time to work through. It would have been inappropriate for someone to think and really expect that the banks would get all this stuff worked out in very short order. So it's a process we have to live through, and people need to keep their eye on the ball, which is the long term.
And man, if I could have bought Goldman Sachs at 80, and I think 2 years from now we'll be saying, oh, if I could have bought that big blue chip. All right, thank you very much, gentlemen. Nice job.